Tell me when, because I can't see. General disclaimer. Welcome to this official presentation on Affiliate Marketing Model 3.0. All presenters are providing their services on a volunteer basis and are active participants in all products they are presenting. Their views and opinions do not necessarily reflect those of the organisation. While we aim for accuracy, errors may occur. All content is for informational purposes only. The information provided is general and not personalised advice. We are not liable for any losses. We provide information and systems, but we do not endorse any purchases of memberships. Your decisions are yours alone, so we advise conducting thorough research. If uncertain, seek guidance from a qualified professional. Attendees accept these terms by continuing to view this presentation. Let's explore affiliate marketing cautiously and curiously. Legal disclaimer. You are viewing an Affiliate Marketing 3.0 official presentation. All products and services, their component parts and operating methods and systems, either provided by or created by Affiliate Marketing 3.0, belong solely to Affiliate Marketing 3.0. All IPs are protected. Anyone copying, distributing, or reselling any Affiliate Marketing 3.0 product without express permission risks serious legal consequences. Any unauthorized broadcasting, live streaming, or social media sharing of Affiliate Marketing 3.0 presentations is strictly prohibited. Downloading and re-uploading presentations without permission violates copyright law and may also lead to legal consequences.
Hello, greetings to everybody. Welcome. Good morning, good afternoon, depending on which part of the world you are joining from. This is a very special event and I wholeheartedly welcome each and everybody on behalf of Affiliate Marketing 3.0. For those who may not know me, my name is Gabriela and I'm from Hungary, and I have been part of this community for quite some time. I feel honored and privileged that I will be your host for this evening. This is not just any ordinary night, because we are having an amazing educational event on blockchain and AI. Our special keynote speaker, who has deep knowledge and a vast understanding of the emerging technological driving forces of the future, is no other than the CEO himself. He will gift us with his insights tonight. Before we dive in, I'd like to extend a warm welcome to our new guest joining us for the first time. We are delighted to have you here, and we hope tonight's session gives you a deeper understanding of the immense potential and opportunities available within our business. I also acknowledge the presence of rank leaders and trainers from the panel. First of all, let me welcome Lucky, Joe, and all the leaders that are here with us tonight. Amazing. A huge shout out as well to our incredible rank leaders and trainers. Your dedication, leadership, and success continue to inspire us all. Thank you for being a driving force behind our growing community. So tonight is a very special night. We are going to have an AI and blockchain education from no other than the CEO himself of Affiliate Marketing 3.0. He's a 29-year-old technopreneur from India who has been setting a benchmark in this crypto and blockchain industry. He, with his experience, with his knowledge, and his innovative products and projects, is changing the course of this entire affiliate marketing industry. He's no other than Mr. Chavez. Tonight, we have the opportunity to gain a better understanding from the very person who has built and shaped this business. And trust me, you don't want to miss a single moment of it. With that being said, let's get ready to dive in. I encourage you all to invite your teams and friends. Let us all benefit from this Friday call. To absorb as much value as possible, please stay engaged, take notes, and listen with an open mind. Now, without further ado, it is my absolute honor to introduce the mastermind behind this thriving organization. Please help me welcome our esteemed CEO, Chavez. Thank you for this amazing opportunity that we can learn directly from you. Chavez, a warm welcome to you, and the floor is yours.
Thank you so much, Gabriela. Welcome to UK Primetime. I believe everybody is doing good. Well, it is such a good day. I woke up with the news that many of you, uh, might have got heart filled with. And yes, this is the baby steps that we are taking into the recognition of the products that we are building. And of course, it is coming through the recognized platforms, recognized, esteemed organizations where our products are leading the chart and our products are getting into it. But uh, all in all, this is all our collective effort. And I want to dedicate each and every milestone of success that we achieve to the whole community. This is not me, this is all of us, which is taking pride in the products we have built together and and all the struggles that we have done together. So today's call is all about, as I promised, it is going to be uh, based on staking, how staking is done, what is the basics from it is just like uh, you can say if you were in school and staking was taught in school, this is how they will teach. So I have taken this initiative of coming on Fridays and bringing and breaking down the complex terms, complex concepts into common understanding into layman's terms. So let's understand deeply today what is staking, how it is beneficial, what is the what are the potential outcomes, and what are we going to do with the mechanism, and how it is going to benefit us as a community, as a members of or miners of BTCC. So I will share my screen. All right. So let's learn from the basics. Um, what is staking in crypto? So when we think about crypto staking, it is just like a fixed deposit in the bank. But instead of earning interest, you earn crypto rewards. It can be either in the same token or coin you stake, or it can be different as well. It is just like parking your money in the bank. Since this industry is now getting into the mainstream, banking is being developed also into blockchain. So the concept of bringing neobanks, blockchain banks, is going to drive the whole models of uh, staking into a complied version where you are KYC'd, you keep funds in your wallets, and you feel like your money is landed in a bank which is recognized, which is licensed. So today we will understand the staking in a very common term. Then I will take you guys into a deeper detail as to how we are looking at staking. And definitely, if we will have uh, all the discussions and if we will have enough time, then I will explain ETH FINA also. It's a very good project where staking is going to help our community to realize some additional benefits and perks. So you lock your crypto into a staking platform similar to putting money in the savings account. Your crypto helps keep the network running securely, like your bank use deposits to lend the money. You deposit the money in your bank, it goes into different deposits, uh, systematic investment portfolios, funds. In return, you earn rewards. You either earn new uh, currency in fiat, or you earn some points which you can redeem with that same similar bank. So over time, your interests come, but unlike the bank, your funds may be locked for a certain period. It means that you can't access your funds uh, at that moment immediately. Crypto prices, of course, crypto is a volatile industry where prices, they go up and down. It's a volatile industry, just like Forex. So the value of your rewards might change, but some systems allow liquid staking where you can still use your staked crypto. I will explain about that as well. So this is the basics. This very basic understanding of staking, just like putting money in your bank account. Now let's understand about about crypto. So staking in crypto is a process of participating in a blockchain network by locking up certain amount of cryptocurrency to support the network's security and operations. How many people run validators here on BTC20 Smart Chain? Okay, looks like nobody left. Okay. All right. So all of the validators are here. Okay. So if you guys remember, and people who are new, who could not participate in the validators, uh, you guys initially staked your 1,000 BTCCs. Yes, 1,000 BTCCs in the validators. At that point of time, I don't remember what was the price of BTCC when we introduced the validators. What was the price?
$85.
$85. So you staked 1,000 BTCCs into the validators, and it was around $85,000 in value. But right now, if you see your staked crypto, which is not accessible by you because it's on chain in the validation, right now, if we calculate with $155, it is around $155,000 worth of crypto, which is staked, which is providing the validation to the chain. And it is bringing you some rewards that is coming to you regardless of any market movement in BTCC. Let's say BTCC price goes to $1,000, then also you receive the staking rewards. And that is the core concept of staking in the validation as a validator. So how staking works? It's a proof of stake mechanism. Unlike proof of work, that's why you see very less Bitcoin staking platforms. But Bitcoin is majorly staked by banks, ETFs, or some financial entities which utilize your Bitcoins not with the trading. People who utilize your crypto in trading after staking it, that's where you end up in a Ponzi scheme. So your crypto, when it is staked in a platform which is providing either delegation, which is responsible for processing transactions, since a blockchain network comprises of a lot of elements where there is a you know what do you call that, repository required of a lot of coins. And initially, when we started with BTC20 Smart Chain, we did not have, as a blockchain network, we did not have any supply. So the first thing that I did, I extended the request to the community that, hey, you guys are miners, you guys need to stake some BTCCs in the validators so that we can start running the network, we can keep running the network. So to fuel the blockchain, you have provided your BTCCs, which are logged in a smart contract, which you can see on chain. And that is the basics of staking mechanism. So in the proof of stake mechanism, which requires mining power, which requires delegated POS, liquidity staking, which allows users to validate transactions and secure the network by locking up their coins. So you have locked your coins to validate the transactions. You have locked your coins to secure the network. Nodes, on the same hand, plays a different role. But validation is separate. It is staking mechanism. Nodes, on the other hand, they do not work on staking mechanism. They work on the computation mechanism. The power to the blockchain, which is when provided to ensure the smooth functionality of blockchain, where you technically validate the transaction. Because when you connect your miner to the node, you are basically taking a help of an active node to start mining BTCC. Can you mine BTCC without staking your miner to the node? Or in any other blockchain ecosystem, uh, can you gain any rewards without staking your assets to the nodes or the validators? No. So similarly, in the simple fashion, I will explain this also in a very simple terms again. So when there is proof of stake mechanism, just like Ethereum. So every Ethereum which is in supply, when Ethereum 2.0 came, when they moved from proof of work to proof of stake, the liquidity, the on-chain liquidity was their whole objective, because at that time when projects were deploying one after another, supply of Ethereum was distributed, redistributed. They wanted to ensure that there is enough liquidity. So this proof of proof of stake mechanism helps to fuel the blockchain to function and to validate transactions. Similarly, in the validators, you have a certain number of coins, tokens you stake, and that gives power to the blockchain to operate. And then there are rewards. So people who stakers, they receive rewards in proportion to their staked amount of tokens, similar to earning interest. So when you have staked your BTCCs to the validators, you are earning interest. And this interest is with every block that is created on the blockchain. So, and also it comes with either lockup period, but with us, it is infinite lockup period. In the case of our flagship validators, because it was a new ecosystem, we did not have any supply. Every single coin that was mined at that time was through the miners. There was zero pre-mined supply, pre-minted supply. So it comes with a permanent lockup period, which gives you more rewards. So in future, when more validators are going to arrive, it may not come with indefinite staking period, indefinite lockup period. We may introduce certain validators with less staking rewards, with which you can either unstake the BTCCs also. The reason why I'm explaining all this with reference to BTCC, because you operate the network, you understand it more. And it is the similar fashion which happens in all staking platforms. So now, today you might have a better understanding as to what we did 1.5 years ago. Okay, so it is also essential for the network security. More staking power means a stronger and more secure blockchain. Efficient in terms of energy compared to mining, staking consumes less energy. So many of you might have heard that you can reduce your gas fee on the network when you have staked some tokens. You might have heard energy staking, energy efficiency, lending, borrowing of energy, right? Especially on the Tron network, I believe all of you are aware about the Tron network, TRC20, because we used to operate, we still operate with TRC network. The deposits in WAAS, withdrawals in WAAS were in TRC20. Now it is also in USDC Polygon, but earlier we did only TRC20. So on TRC20 network, how did we as an organization used to manage the energy efficiency? Because when you deposited funds, when you generated your wallets, it used to cost us a lot of TRX. And every day we used to burn a lot of trons. So what we did, we created a repository of Tron. So that repository was staked inside the Tron. And with that repository, we used to get the discounted rate of processing. And that's the power of staking. This is the real essence of staking, where when it comes to actual application, and it helps certain organizations to operate. Similar things we can do on BTC20 network as well. When gas fee will increase in future, when uh, computation will be of higher cost, imagine your BTC20 transactions costing you $1 per transaction. That time, if you will have some amount of BTCCs staked in some platform where it will give you some energy consumption, discounts. So your gas fee for your particular wallet will be maybe 20 cents, 30 cents, while others would pay $1. So these are the basic use cases or applications of the staking. Staking is not like you stake tokens, I'm going to give you some interest. Interest from where? When your tokens are utilized somewhere, you then become eligible, or there is some real utility of staking where rewards or discounts can be distributed. There are potential risks also in staking. There is lockup risk. Your funds may be locked for a period, making them inaccessible. Just like the people who believed in BTC20 smart chain, BTC20 network, they blindly put their 1,000 BTCCs into staking for indefinite time. And I cleared this, that you cannot take your BTCCs back. And look what they did. And they made more than they locked up from that period till date. So there are results also. Then there are slashing penalties. Misbehaving validators may lose a portion of their stake. So, of course, if you are till now, there have been no mechanism of misbehaving on BTC20 smart chain. But in future, if there may be, then validators may even lose a portion of their stake. If their address is flagged, if they do some certain kind of if they go to a contract, try to fetch funds out, all because their wallet uh, basically had signing authority to send BTCCs to the smart contract, which has staked it indefinitely. But if any of the validators may perform some, uh, malicious activities, then their BTCCs are going to be, their rewards are going to be either slashed, reduced, or it can even be returned, and their BTCs might be returned also, and they would not get anything. So these are the future prospects where blockchain ecosystem, when becomes bigger and bigger, these are the potential risks as as a network where you stake some. There may be, you can imagine some network which is very new, which is very volatile, which is very insecure. There might be hacks, and then you may lose funds. And in that situation, that particular network may not be able to pay you the portion of your stake, and you may lose funds also. So there is price volatility also. Imagine BTCCs go to zero. Then at that time, tokens fluctuate, and you get reduced potential gains, right? If everybody sells their Bitcoins, if everybody sells their BTCCs, it might not go zero because we have a lot in liquidity pools, we have a lot in validators. It may not go to zero. That this is the reason it may not go to zero, because we have a lot of staked BTCCs inside the network that will safeguard. But at the same time, if rest of the people are selling and the price drops, these validators are also going to face impact of that price slash. So these are the potential risks inside staking. Now let's understand more deeply into staking, how staking and holding crypto in a wallet have different impact on a user's leverage, liquidity, and risk exposure. How staking creates leverage, where this money comes from. Staking itself doesn't give direct leverage like margin trading, but it enables leverage like behavior through liquid staking and yield compounding. Let's understand. Okay, these are little complex terms. Let me break it down. So liquid staking is soft leverage. So when you stake your, let's say you stake your Ethereum with Lido Finance, it's a very big platform. You receive staked Ethereum, ST ETH, a liquid token representing your staked ETH. When you, okay, let's compare it with Capital 3.0. When you stake, you vote with your Capital 3.0 tokens, you receive STC30 DAO tokens. That means you have staked your Capital 3.0 tokens that have a value of the vote, and that is equivalent with the weightage of the allocation that you have received. And you receive staked ETH or staked C30 DAO tokens, which gives you the proof that you have certain amount or number of tokens which are your staked amount. And this gives you the leverage effect. So you can use staked ETH as a collateral to borrow more ETH. You can restake it. You can repeat it, creating leveraged yield strategy. So this is the leverage yield strategy which actually runs all the staking platforms. So if you go on Google and write a number of, you will get a lot of staking platforms like Lido Finance, like liquidity providers, uh, Huma Finance, uh, like Aave, all these platforms which have certain utility of the tokens which you stake. They provide either flash loans, they provide some blockchain fueling principles where your staked tokens are giving you or helping you to either restake it or repeat it. Okay, let me take a very simple example and explain it. It will give you guys more understanding. When you stake your BTCCs in the liquidity pool, there is a liquidity pool also, in which when you stake your tokens, uh, USDT, coin, BTCC, you pair it, or you stake your BTCC along with wrapped Bitcoin, you are basically providing liquidity to the DEX. How do you think our DEX is operational? It is because of the liquidity that you have provided in the DEX. Many of you, most of you have provided liquidity to the DEX. And every transaction that goes through the DEX have a fee. It has a swap fee. And this fee is distributed and redistributed amongst all the liquidity providers with respect to the percentage of the ownership of the liquidity pool. So this is a very simple mechanism that is complicated by people to raise more and more money. Certain platforms, they make it really colorful. If you stake, you get these NFTs, and these NFTs are nothing but staked tokens, and these NFTs will help you claim the rewards. So just like you stake your BTCC along with USDT to provide liquidity in the DEX. You receive liquidity pool tokens, LP tokens. And these LP tokens are your staking rewards that you receive. And these are the core concepts which derive the staking mechanism. This is exactly similar to the banks. You go to a bank, you deposit US dollars, and you do a term deposit for 10 years. Can you access your funds before 10 years? Yes. You need to apply. You will lose your potential gains, which you might receive in 10 years. They can reverse it to you with a loss. But if you don't want to withdraw, your funds are locked, and they produce annual and maybe monthly rewards, some interest. So this is how term deposits in the banking is used. And this is how all the mutual funds, all the, uh, I'm not talking about investments here. I'm talking about regulated funds which are not for investment, which are not pooled funds, which are fundamental funds, which are called financial instruments by the bank, and bank is licensed to do that. When you park some money in a bank in India, you receive certain amount of interest, even without locking it. When you put some money in a bank in Europe, you don't receive any interest because banks in Europe are dying. Banks that tells us banks in India are thriving because they have utility of the money that you have parked with them. That is staking only, nothing else. If you park your money, if you park your bitcoins with El Salvador government in the banks, they give you huge rewards. Why? Because their whole economy is running on bitcoins. So this is the same concept. It is just labeled with staking, and this is the label under which most of the scams they work in the crypto. And most of the good staking platforms, utility products, they operate. When I will start staking of BTCC as the plain mechanism, I will rename it. I will not say it's staking to ensure that you all feel safe that your crypto is not subject to be used or utilized in market operations. Just like in validators, you have your crypto is just sitting there fueling the network, validating the whole BTC20 smart chain. Okay, let's understand pros and cons for that. So pros: increases returns through compounding. Yes, every day you increase the number of tokens you have, and over the number of tokens it compounds. This is creating your passive income. This is the definition of passive income. Passive income is not like putting money in an investment scheme where every day it compounds and brings you nothing but numbers on the dashboard. No. Cons: if staked Ethereum depegs or borrowed Ethereum drops in price, you can face liquidation risks. How? Let's say you have staked BTCCs, okay, today, and we have created a staking model, separate staking model in a different website or different platform where you just put your BTCCs at, let's say, $150 of BTCC price, and we give you, let's say, 18% annual returns on your stake BTCC as your yield. And these 18% are given to you annually or with every block. And there is a condition that if BTCC falls less than $100, you are liquidated, you are zero. And this is what happens with the banks which provide you the lending and borrowing of Bitcoins. All your portfolio becomes zero if the price drops. So it has liquidation risks also. At the same time, it has compounding rewards. So if you restake the rewards every day or every year, every month, your holdings exponentially over time increases. Like reinvesting dividends. If you trade in stock market and you have, let's say you are trading with S&P 500, you receive a certain amount of no, you don't receive nothing. You just see the price going up, price going down, and you as a investor, you as a trader, you leverage on the price of the stock. But when you hold, let's say S&P 500 up to an extent where it can provide you dividend, maybe S&P 500 is very big. Let's take a small stock. Let's say we get listed on stock exchange. Let's say Liquid Finance gets listed in Nasdaq, and we start distributing the equity of Liquid Finance into Nasdaq stock traders. Certain stock traders that may hold more than 1% of Liquid Finance stocks might receive dividends also. Investors who have less than 0.5% may not receive any dividends. So there is a concept of dividends also. That is the reason why all the governments, all these companies are running after creating the ETFs, bigger and bigger. That's why Trump created this crypto reserve, strategic reserve. And that is nothing but bullshit. We only believe in Bitcoin reserve. And let me tell you loud and clear to everyone, if we have to create reserves, then it should start from your family first. You create reserve for your family. Then it should go above the family, and then it should go to the countrywide. So instead of tapping into the personal, of course, it is not going to benefit them to motivate you all or motivate the residents of United States to create family based crypto reserves. So they will promote the government backed reserves. But I want to encourage every one of you to start creating crypto reserves for your family first, then for your companies, then for your groups, then for your maybe extended communities. And that's how it should be done. On the other hand, you know, I won't talk about that too much, but still, this is the right way to create these reserves, which nobody will talk to you about. So there are risks also. Who is this Bob? Please. Okay. Compounding rewards. So I explained you can restake the earned rewards. You can grow your holdings exponentially over time. Let's say you are receiving dividends. So imagine if the BTCCs that you are receiving from validators, these validators would have got a reinvestment mechanism. So every year you are receiving more than 1,000 BTCCs. And if you would have got a chance to pile 1,000 BTCCs back into the validators, everyone would do that. These are your dividends which are increasing the investment, or you can say holdings. And that's how it can be modified and it can be recreated into more complex financial instruments. So blockchain is not very complex. It is simple. It is same as banking. It is same as every other traditional financial instrument. What made it different is the colorful shit coins which were there in the market and which took your confidence, which made you realize that it is so volatile that it can be pumped or dumped. Otherwise, fundamentally, if we see, it is wholesome ecosystem, which is very efficient and transparent way of running banking and finance. Okay, let's understand risks also, and also holding in volatile markets. So there are risks, there are potential risks, market crashes. Let's say value of the crypto goes instantly down. So you can not exit because the funds are locked. Let's say you stake your Ethereum somewhere and Ethereum goes back to $400, just like in bear market. And you have staked your Ethereum at $2,200 now. So at the time of sudden crash of the market, you cannot instantly unstake it and sell it and exit. So the exit of the investors get affected. So this is pure risk. When you are playing in a volatile market, which is not properly evolved in terms of compliance and regulations. So there is a risk of exit, and then slashing penalties, which I was talking about. If you misbehave, risk of slashing is there. Then there is staking token depreciation, which is if staking token inflates too much, rewards might not cover the price drops, only affected price drops. So if you have staked your BTCCs with $80, right, and BTCC price, let's say, goes to $50, so your rewards which are coming, they are not able to satisfy with your basis of the initial stakings, right? Because you are receiving less than $85,000 a year, but you had initially staked in the promise of receiving the tokens at that price. So that is a potential risk. So when okay, we'll understand two scenarios: when staking is better than holding and when holding is better than staking. You you know, after understanding all the risks, all the potential rewards, you may have a question. It's better to hold my BTCC in my wallet or hold my Ethereum or Bitcoin in my wallet rather than staking. So let's understand. So when staking is better than holding, if you are a long-term holder who wants passive income, if you don't want to sell Bitcoins, you stake it with a bank, with a ETF, with a financial instrument, which is giving you legalized paperwork with your KYC. So your money is also secure. Your funds are also secure. You don't have to hold it in your hard wallets. And you are receiving long-term passive income. If you use liquid staking to earn rewards while keeping the liquidity, this is also an option in the market. You can hold the liquidity while staking it in the energy saving or energy consumption platforms. So if you go to Tron, you deposit your Tron in the energy consumption, you can unstake it anytime. So that kind of model gives you ease, because if the price is dropping of Tron, you can quickly go and connect your wallet and unstake it and sell it instantly. This is the approach where staking is better than holding. If you believe the token price will rise or remain stable. So if you believe in Tron, if you believe in BTCC, if you believe in Bitcoin, if you believe in Ethereum that it will go up, then you stake it better than holding it. When holding is better than staking, let's understand this. If you need instant access to sell in case of volatility, if you are a gambler and you don't care about it, I would not say gambler, but if you don't care about the risks, or if you are very careful that your crypto may cause financial damage, then don't stake it. You need instant access. If it is all the what do you say, it is all movable and immovable property that belongs to you solely, then don't stake it. If you're staking rewards, don't overweigh inflation risks. So every other asset in the blockchain, every other thing in the blockchain is a financial asset, or you can say every other instrument in crypto is passing the Harvey test. Only Bitcoin fails the Harvey test, and BTCC also fails the Harvey test. So if it is giving you the staking rewards that don't overweigh the inflation risks, if the whole market crashes, if let's say tomorrow, just like Ukraine and Russia, some other country wakes up and starts war, the entire market is going to fall, right? There are trade deficits, there are many factors which affects the stock markets and then the crypto. So if you think you're staking rewards, or you're staking your tokens that you are staking cannot be affected or bothered by the inflation risks, then stake it. Otherwise, don't. If you are in a bear market and expect prices to drop, then don't stake it. If you think you are in bull run, Bitcoin is today to $200,000 and market is now turning into a bearish mechanism, and Bitcoin is going to go back to $70,000 in the bear market, then don't stake it. So it is a very emotional thing, sentimental thing. It is personal understanding, personal conviction. Now let me explain what are we going to do with staking. All this basics which I explained, how are we going to apply it in our ecosystem? Opportunity to come as a validator on BTC20 Smart Chain is not there right now. It may come in future with the needs and requirement of the blockchain ecosystem. What we are trying to accomplish with this update on BTC20 Smart Chain, we are going to bring the peer-to-peer escrow trading platform. Inside peer-to-peer escrow trading platform, and I would say the credit goes to David. It was David's idea that the fee that we charge for escrow trading, right, that can be reduced when you stake your BTCC. So from the both sides, seller and buyer, if buyer stakes or seller stakes, your fee can be reduced if you stake your BTCC inside the peer-to-peer escrow trading platform. And if you don't trade, then you earn staking rewards also. With this, we will be able to establish a concrete proof of stake mechanism over a separate platform on BTC20 Smart Chain, because peer-to-peer platform is separate. It's not part of the validation, or it is not part of the node ecosystem. So that is a separate product, like a DEX. In DEX, you do liquidity, you provide LPs, you are liquidity provider. Same is with the escrow trading platform. And this mechanism, once we run it for next 3 to 6 months, we will replicate that into LQUID Pay. We will bring this whole staking mechanism, our own mechanism, into LQUID Pay, and you will be able to stake BTCCs. You will be able to stake all the assets through your self-custodian wallet addresses by yourself. Please listen to it carefully. Through your self-custodian wallet addresses inside LQUID Pay, and you will be able to generate staking rewards which can be spent with Visa card. So this is the approach which is going to land, which is going to take BTCC into spending as cash. And that's the objective with staking. I think it has gone a lot. So today I will not explain it ETH FINA staking model. It's better to hold it up. Let me put my computer on charge. It's dying. Okay. So I will explain their model also. Maybe next Friday. It would be nice. Today, understand this. I would say listen to this recording one more time. And then you will have clearer understanding as to what I explained, because sometimes I may talk faster because I understand all these things. I'm not saying you don't understand, you also understand, but it will break it down very clearly for you. And you all need to understand it because you are selling it in the market. So this is where I am taking this whole model, but this cannot happen tomorrow or the next month. This is the way to take the ecosystem. See, we came so far with the organic speed, and we will keep moving forward with the organic speed, with the ways and methods as to how it should organically, in a technical sound way, move forward. And we are doing that. So this is it for the Friday. I recommend everyone who is listening, who is sitting on the Zoom, to once again go through the recording and make notes and understand it carefully, because this is very important for you. It is going to give you a good sales pitch, because you cannot get into BTC20 network and start creating your models of staking, but you need to sell it. So I recommend that. Thank you so much, everyone, for joining. Back to you, Gabriela.
Wow, that was just incredible, eye-opening explanation on staking. Wow, my pen was on fire. I had to turn the video down because the whole thing was shaking. Wow, that was just one of a kind. I mean, there is a lot to learn and a lot to absorb. And yes, I will need to review these notes. And I recommend that you do too. Let me express a heartfelt gratitude to our respecting CEO Chavez. Your wisdom, leadership, and your vision and what you do for this community just continues to inspire and empower us all. You are truly honored to have had this experience opportunity. Oh my God, and gain this first-hand knowledge and this clear explanation from you. Wow, that was just amazing, amazing. Thank you so, so much. And as we conclude this session, I want to take a moment to recognize and appreciate our incredible rank leaders and trainers attending. Lucky, David, Joe, Eunice, Chantal, Rajiv. Thank you. Thank you for being with us tonight.
Gabriela, sorry, before we end,
yes.
I just want to say a few things. I want to say congratulations to Chavez. What an achievement and well-deserved recognition, Chavez. And I am so proud, and really, I think the whole community should be super proud to be sitting here after everything we've gone through. What a journey this has been. For 3 years, you know, look where we are today and where we were just I don't know. I don't even remember how long ago it was. It feels like we've always been here because the day we started, the vision and everything else we shared with each other, Chavez. I talked about this on the India call earlier, that when, I've been in a networking, I've been doing this for a long time, but I've never been in the front. I have always done my business in the background with my small team because I never ever felt comfortable in MLM to promote anything until I met you. The day I met you was like 3 years ago. You weren't even, you were just doing your tech in the background. You weren't in the front either. And I remember we met, we spoke, and I was like, wow, somebody finally I met who has a similar vision and values as myself, who wants to change this industry. Because, there's a lot in this bad name in this industry, lot things in this industry. People, when you say you're an MLM, people automatically think scams, Ponzi's and everything else. And so I never wanted to be part of that. So never really promoted anything with a heart and soul as I have this because of you. And I am really proud. And I want to say thank you to you for where you have brought us. And it's just the beginning. We're just starting. And I say this over and over again. We've been firefighting up to now, trying to get to the point we are now. And you said 2025 is our year. We both said that. And you can see like how we started 1st of January, we started with Liquid Pay. And wow, you know what? I cannot wait for this year and the next 10, 15 years to, achieve what we need to achieve together. So thank you so much. And from the bottom of my heart.
Thank you so much.
Way!
Wonderful, Lucky. Thank you so much. You just
And-
summarized it, but we feel it in our heart. Thank you.
Thank you.
Wonderful.
No problem, Gabriella. I want to invite Grace, and she wants to say a few words. Grace, hello.
Hello,
How are you?
hello. And go ahead and let me, okay. Chavez,
Hello,
I
Grace.
fell off my, how are you? I fell off my chair laughing when you started talking about the reserves. I can't wait to you next week when you talk about creating reserves for the family. And Chavez, it does not surprise me that you give that kind of advice because you are a man that has such heart for the family. And the way that you come every Friday to embrace this community and educate this community, you model Burlington's motto: an educated client is their best client or consumer. And you have embraced this community as such. So thank you very much for that. But Lucky and I have been doing high fives and high tens, okay? We're trying to see who loves you more. We're competing on who loves you more. I say, I loved him a lot. But we are so proud. I am so, so proud. And Chavez, this article on you on Force Magazine, congratulations. Well deserved, well earned, and thank you for being the subject of great representation. It gives us great pride to realize the success. One of the mottos that I like Trashit has on his t-shirts is you pursue excellence and success will surely follow. And Chavez, that is what you have done. So I am going to enjoy the article with some tea and some sweet pan and think about our sweet and humble and visionary of a CEO. So thank you very much.
Thank you so much.
Lucky, thank you. for your leadership and allowing me to go ahead and have this moment with Chavez to thank him publicly for all that he's doing. And this education was phenomenal. And one thing, Lucky, you just said that I want to also echo is this whole idea of staking and this whole industry and platform. It is because of your integrity, your vision, the way that you have brought us along that makes it very trusting. And I did not have a problem being here supporting you every step of the way because it felt safe. Do you understand? You probably cannot appreciate how much that means to us. And so I echo that with Lucky. So thank you. Congratulations. And I know your mom is proud.
Thank you. Thank you so much. Yes, she is.
Thank you, Grace.
Thank you.
Thank you, Grace. You're super kind. Thank you very, very much. We love you.
You're lovely. Lovely, lovely, Gabrielle. Thank you so much. Absolutely.
Thank you.
Well done.
So, and I would like to also thank you all, everybody. Of course, a massive thank you to each and every one of you, our wonderful participants. Your presence, engagement, and enthusiasm make this webinar truly special. So tonight's session wasn't just about information, it was about transformation. The real magic happens when we take what we have learned and put it into action. So let's take that next step with confidence, the insights we have gained, and work towards the success we all deserve. Ladies and gentlemen, this concludes our event for tonight. Have an amazing day ahead, and thank you very much. Thank you all.
Thank you. Bye-bye.